All right, so welcome to this Trading and Investing 101 webinar. Oh, shit, where's my notes? There we go. So, what's the goal of this webinar? Basically, the whole idea of this webinar, like all the information I'm sharing with you is not new information at all. It's all out there. If you tried hard enough, you'll find everything that I've presented very in depth out there in the internet. But I just want to introduce this in a framework that includes economics, psychology, and financials, and put together in a way that I think makes sense and shows some kind of linear direction towards how you can add these tools to make better investment and business decisions. Right? So let's get started. So most people get into investing or trading without having the slightest idea of what game they're getting into exactly. Like it's not as simple as just hitting buy in whatever financial instrument or stock or crypto you see, just hitting buy and waiting, right? You might win a few times or the first time or however many times, but long term, it's not going to be sustainable, right? In reality, most people take random trades or investment decisions. There's no plan, no discipline, and they don't realize that how detrimental it is to becoming profitable long term. Yeah, you could be riding a new high with stocks, cryptos, indexes, whatever. You could be in Dogecoin right now hitting that high. You could have been participating in GameStop, but you don't know why you're in there. You just hit buy just because it was the popular thing to do or all the hype is there, right? But what will you do when the market is a complete bloodbath? Right now, we're seeing greens everywhere every day because we're still recovering from the big crash from COVID, but what are you going to see when the market turns the other way and shows a sea of red, right? Like, what are you going to see when the market is showing a bunch of reds, right? If you don't have a clear plan, then you're just going to go based off your emotions, right? And I've seen it a lot where people make these decisions without a plan, just riding aimlessly over and over again, and eventually I've seen people lose a lot or all of it. I'll share a link on this Wall Street Bets video I saw. It's pretty cool. But it basically shows the idea where people are just YOLOing large amounts of money. Yeah, they're winning, but most of them just end up losing it all, right? So I don't want to teach that here. I'm trying to show something very serious here. Because trading and investing in reality is one of the toughest, most stressful ways to make easy money. And like any craft or project, you have to have a concrete plan and stick to that plan if you want to see long-term success. So the goal, again, is to introduce a framework, right? I want to help you find what your actual risk appetite is because in order to get anywhere, you have to take some risks. But what we think our appetite is not always equal to what our risk appetite actually is. Basically, what that means is if I think I'm a big baller who's willing to put $2,000 on one casino bet, right? But in actuality, when I'm actually in the casino, I get super emotional when I lose 20 bucks, right? So through this framework that I want to introduce, you can also find your own appetite to risk and build a system around that risk appetite. I'm also going to show you how you can gauge opportunities based on your goals and plans and your past experience to further success because everybody is different. Everybody has different things they want to do in their life. Everyone has different experiences. Everyone views the world differently. So there's no one set way of achieving achieving success. So it doesn't hurt to have more tools to your success. I'm not here to teach you, sorry, I'm not here to pass you fish. I'm here to teach you how to fish. And these tools will just help you become a better fisherman for these opportunities, right? So these tools include how to do fundamental analysis, how to do technical analysis, how to do sentiment analysis. So how to like look at psychology, use your own psychology, and how to overcome your own mental barriers to achieve heights you didn't think you would. So this webinar is not just for people who are new to investing in trading, but it's also for seasoned investors or traders, and it's a really good refresher. Not to show an easy way to find success as a trader or investor, but at least a practical approach that you can take to fit into your own style and eventually find your own system that works for you. So I'm not going to go too in depth in this webinar because honestly, on each and every topic, I could make a whole individual webinar for each of them, and that would just simply bore you guys to death, and I don't want to do that. So I'm just going to scratch the surface with some basic topics. If you guys want, by all means, go search it all on your own, but I will cover these individual topics more in depth in future webinars. So I'm going to talk about what is a market, right? Touch on basics of supply and demand, what the barter system is, and the origin of the money we use today. I'm going to talk about the idea, is the market perfectly efficient? And then I'm going to introduce some basic technical analysis and some psychology pointers. Okay. In the future, I will make a whole webinar talking about stocks, right? All the nitty gritty stuff about stocks, Forex. I'll even talk about commodities, precious metals, futures, right? Even if you guys don't know what it is now, don't worry. I will cover it in the future, and you'll find lots of similarities between all these topics, right? We're also going to dive deeper down the psychology rabbit hole because psychology is a super underrated part of any discipline, trading, investing, running a business, doing a very respected profession like a doctor, lawyer. Like psychology is huge, and it's very, very underrated. I'll also talk about stuff like game theory, right? The art of thinking strategically, because this is a very big game that we're playing. And to know that is a big game we're playing helps build you psychologically to succeed. And then we're going to talk about more fundamental economic theory that's just going to add to your tool belt. So, why are you here? There's a bunch of reasons why everyone is here. And regardless of what your reasons are, the idea is going to be the same. Like, whether you want to make money, I want to make money, you all want to make money, we all want financial freedom here. We all want to save money for future opportunities because opportunities come and go every single day, right? We all have families. We all want to take care of our parents, our brothers and sisters, our friends and family, right? Everyone's individual goals are different, but at the end of the day, everyone's means of getting there, when you really, really break it down, is more or less the same, right? We just have different ways of doing it. There's different ways of doing the same thing, right? Whether you want to buy and hold financial instruments. By the way, I'm going to use terms like instrument, security, asset. They all mean the same thing. A financial instrument can be anything like a stock, a cryptocurrency, anything you can put money in that appreciates in value can be called an instrument. So I'm just going to use these terms interchangeably, just in case it confuses some of you. But whether you want to buy and hold financial instruments like stocks, bonds, ETFs, anything for long periods of time and selling it at a profit, right? Because that's what fundamentally a lot of people are taught to do when they hold RSPs, or if you're in the States, a 401k, right? That's what they're doing. They're buying into a fund that buys stocks to hold for a long period of time. When you create or buy a business and you eventually sell a profit, you're doing the same thing, right? If you have a product or service and you service product or service, you sell at a profit, right? Everyone desires to reach their goals one way or the other through their own unique situations and experiences, but you're more or less doing something very similar. Everyone has a unique skill set or a set of resources that others can't easily get, which can basically be your edge, right? You just keep exercising the same thing day in, day out until you reach your goals. So what do you do to capitalize on these things? So before we um, before we discuss money, at the end of the day, no matter what you're doing, it's not money you're really going after. It's value. The goal is not to show you how to chase the money, but how to chase value. And it's one of those reasons why money remains elusive to a lot of people because they don't know that they're actually supposed to chase value, right? Long before anyone used money, right? We used to trade actual goods and services instead of money, right? Everyone uses money, but most people don't truly know what it is. Some people believe it's a root of all evil because they've seen the greed of the wealthy and the things human beings do to attain it, right? Is money the root of all evil? I personally don't think so, and I'll explain why. So, so before we actually started using money, we used what's called a barter system. To barter is basically to trade goods and services between two or more parties without the use of money. We still do these things till date, right? Countries still trade respective goods with each other if they don't have the financing to acquire it. Like if I go to a mechanic and we're good friends, I may not have to pay him. Maybe I'll give him something else or a service that I have in exchange, right? Even if the world plunged into an apocalyptic pandemonium, money would not even matter at that point. Money's best service would be as fuel for a flame rather than an instrument of trade. We would find other ways to trade. I think everyone would agree with me in saying that if we lived in a post-apocalyptic world, a resource like water would probably act more like money than actual money because it's a valuable resource, right? So bartering involves the provision of one good or service by one party in return for another good or service from another party. These two individuals negotiate to determine the relative value of goods and services and offer them to, to one another in an even exchange. We still barter today as a society, like I said, from time to time between peers. Like, I don't know if you've ever seen instances where um, some celebrities or some singers, they'll do like a show for someone, and instead of accepting a cash payment, they'll take stock instead. That's still a form of bartering, right? Sometimes a drug dealer and a prostitute might exchange drugs for sex for one another. It still happens. Even a married couple engage in the same behavior, right? Husband do chores, wife gives favors, It still happens. We still do it. It's only natural. It's not inherently good or bad. It's just the way things are done. So why did we shift from bartering to a currency-based system? So the idea of bartering is predicated on a double coincidence of wants. He has what I need and I have what he wants. If that's not the case, then there's no trade, right? There's no point of doing a trade if he doesn't have the relative value of what I'm offering or vice versa, right? The only problem with bartering is that to arrange it can be time consuming and the cost of the transaction can be deadly or very costly. The exchange of value cannot always be one to one. And like if I'm trading a cow or a horse for a car, right? Let's say I'm trading a $21,000 car, but my horse is worth $25,000, right? There's no one-to-one exchange for that, even though I need the car and this guy and the person I'm trading with needs my horse, right? So that's one problem with bartering, and that's one reason why money has been invented, because money is something that you can break down into small units so that it's easier to facilitate trade between two parties, two or more parties, right? Instead of a horse, I can just sell the horse for money so that I can divide those units down to smaller units and buy the car with the cash for exactly 21,000. So I don't have to give up the $4,000 worth of units for no reason, right? The invention of money makes these transactions more time efficient, quote unquote, move smoother. You can denote value more precisely using currency in order to make a fair trade. Before, we started using precious metals like gold and silver coins to denominate value and trade with. But eventually, when you need to make large transactions, it's carrying large amounts of these precious metals become inconvenient and obsolete. So, what banking systems started to do is they started to create these banknotes where a certain amount of gold equals a gold certificate. So you can go to the bank and redeem a certain number of gold coins for that gold certificate. And this makes it way easier, even easier to facilitate transactions. And since there was a finite amount of gold to back your currencies with, you couldn't print currencies to infinity. And this created a little bit of stability with how currencies are valued, right? And this paper money could be used to buy goods and services. So this is basically how paper money was created. So eventually, oh, eventually this no longer became the case when countries started abolishing the gold standard. Why did they do that? Because war is very expensive. Back in World War One, World War Two era, war was very expensive, and the only way to get more money is either tax citizens, which they could not do, or print more money, which they very well could do. So they decided to abolish the gold system so that they can print as much money as they want to finance the wars. And thus was the birth of fiat money. Well, not the birth of fiat money, but that's when it really, really started gaining traction around the world. So what's the point of me telling you all this? Right? Money, the moral of the story is money in and of itself has no actual value. It's just a piece of paper at the end of the day. Whether it's a seashell, a coin, a piece of paper, its value is symbolic. It conveys importance the people place in it. That's why cryptocurrencies have gained so much traction over the last 10 years. People have put great importance on it. People have started seeing reliability in it, stability in it, right? Fundamentally, there are three reasons why a money or currency derives its value by virtue of its functions. One, by definition, it has to serve as a medium of exchange. Money allows people to trade goods and services indirectly, right? It has to be quote unquote liquid, meaning if I sell someone my car for $21,000, that means that means for the $21,000 that I have that I want to go buy something else with, whoever I'm going to buy that from perceives my $21,000 to be worth equal to or more than $21,000. That's the only way. Otherwise, I'm losing money or I'm losing value. And that would defeat the purpose of money or the currency. Two, money has to serve as a unit of measurement. I think we're all familiar with this because we use money to measure the value of just about anything, right? We know the value difference between a Bentley and a Toyota because we know that the Bentley is worth more monetary units than a Toyota is. That's obvious. It helps communicate the price of goods. And the third function of money is that it serves as a storehouse for wealth. Like I said before, when I sell my car for $21,000, I'm very confident that my $21,000 will be still worth $21,000 long enough for me to transact it into a different good or service. It provides individuals with the way to store their wealth in the long term, or at least in our case, the next transaction. Okay. Oh, so one more thing. You know how every country also has their own currency, like how the Japanese have the yen, the China has yuan, US dollar, Canada has a Canadian dollar. You can view you can view these currencies as kind of like a stock price for that country. We can gauge the health of a country based on how much their currency is worth too. So that's one interesting thing about money. So that brings us to that brings us to the idea of what is the market. When you say market, most people think of a supermarket or a farmer's market or a mall, and you're not wrong. All a market is just places where people engage in trade, right? So in a farmer's market, farmers might trade crops amongst themselves, right? Like a corn farmer might trade with a pepper farmer, or they might sell their crops to people for currency so that they can buy other resources that they might need. The idea of markets, especially in the digital age we live in, exists almost omnipresently around us, right? Any of us can just open our phones and computer, go tune in to Amazon or Etsy or eBay. All of those are virtual markets that are within the grasp of our fingertips, right? It can be a physical place like a farmer's market. It can also be electronic, like a currency market as well, right? You can also conceptualize markets over a geographical region, right? Such as Ontario car dealers, right? All a market is just a common place where people bring products, resources, and services to people who want it or need it, and they trade for goods and services that they might need, right? The concept of markets is the same all around. If you think about it, every comfort and convenience you can think about can be bought or sold because someone out there desires it. We refer to them as consumers, and someone else out there has it. We call suppliers and we call them producers, right? Believe it or not, there are people in China who sell air, canned air. All kinds of things can be bought or sold. To put it simply, all the market is just a collection of consumers and producers exchanging value, whether it's through physical or non-tangible resources and services. So to illustrate demand and supply, these are the most fundamental aspects of economics and how we view markets, right? Whether you're an academic or a farmer or a pharmaceutical manufacturer or simply a consumer, the basic premise of supply and demand is integrated in your daily actions. We all are some way aware of this concept. Even if you've never really seen these before, we all are aware of this concept, right? Of supply and demand. If any of you recall from when PlayStation 5s were released, there were those who understood that demand for PlayStation 5s were way greater than the available supply of them. So what these geniuses did was buy more PlayStation 5s that they could get as many as they could get their hands on, and then as soon as they waited for them to get sold out, right? Wait for a huge demand squeeze for them, they decided to sell these PS5s for decent profits. Like my cousin bought what 4 or 5 PS5s, and his profits he made enough profits to basically pay for his own PS5. He basically got his own PS5 for free, taking advantage of this basic principle of supply and demand, right? It's just one small idea. So these two figures just depicts the most basic relationship between the price of a good and its demand from a standpoint of the consumer and producer, right? Supply graphs are drawn from the perspective of the producer. Demand is portrayed from the consumer's point of view, right? If the price of a good increases, the demand for the product will decrease, except for a few um, obscure situations or reasons. But fundamentally, the more demand, the lower the price. Sorry, the higher the price, the lower the demand. So if let's use an example. Let's say TVs. If TVs are sold for $5 each, right? Then a large number of consumers will purchase them at a high frequency. Like if TVs were $5 each, our Walmarts would be flooded. with people running over each other, just going apeshit for these TVs, right? People would buy more TVs than they would need, putting one in every room and even put some in storage. Essentially, because everyone can easily afford the TV, the demand for these products will remain high, right? High demand, low price. On the other hand, if the price of a television is $50,000, like if we were here, price was $50,000, then it will be a more rare consumer product as only the wealthy will be able to afford the price. While most people would still love to buy TVs at that price, the demand would be extremely low. That's how demand works from the consumer side. Now, on the other side, from the supplier side, as when the price of a good increases, these producers are willing to manufacture or supply more of the product to realize greater profits. Likewise, falling prices depress production, as producers may not be able to cover their input costs upon selling the final good. I don't know if you guys ever heard of the term economies of scale. Basically, it's one of the reasons why Amazon flourishes so much, because they can offer at such huge scales, right? So going back to our TV example, if the input costs to produce a TV are set at $50 plus the variable costs of labor, production would be highly unprofitable when the selling price of the TV drops below the $50 mark, right? On the other hand, when prices are higher than $50, then producers are enticed to increase their levels of activity in production because the more they make, the more money they're going to make, right? So if television prices are $1,000 each, then manufacturers can keep focus on producing TV sets in addition to other possible ventures, keeping all variables the same, but increasing the selling price of the TV to $50,000 would benefit the producers and provide the incentive to build more TVs. So, yeah, they wouldn't sell, like, cause consumers wouldn't buy as many TVs at the $50,000 price point, but producers are eating a lot when they're selling at that point. So at some point, these producers and consumers have to meet somewhere in the middle, right? And that's what we call the equilibrium. This behavior for producers to seek maximum amounts of profits forces the supply curve to be upward sloping. I'm not going to introduce any math, so don't worry about that. So we have to meet in the middle somewhere, right? Because there has to be enough people looking to buy the product, and producers have to be producing enough to be eating enough profits. So somewhere they meet in the middle, creating an equilibrium, right? The market, when left alone, fundamentally is always looking for an equilibrium. It does it by itself without, for the most part, without any outside intervention, right? Collectively, people will always move the price to an equilibrium, and producers have to adjust to this market behavior by consumers. That's how we naturally get to our equilibrium, right? We can see this in our price charts too, right? Markets always trend up, down, and when we see it in a sideways movement, we can kind of think of that as an equilibrium because when all else is the same, the market price is not going anywhere. It doesn't have to move anywhere, right? When you see the market move sideways, you can say that it's equilibrium. Whenever there's a shift, like an uptrend or a downtrend, one can say one can say that the market is trying to adjust to a newer equilibrium based on new information that was brought in, bringing in one-sided volatility. As traders and investors, that's our bread and butter, right? Since the market is not perfect at pricing instruments or assets or securities, we can take advantage of this one-sided volatility that comes in from new information that would affect the underlying value of these instruments we're trading. I'm going to discuss more of this later. But basically, the market is always looking for new equilibriums, and we are taking advantage of the one-sided volatility that comes from that, right? So that brings the question, is the market perfectly efficient, right? When I say perfectly efficient, The market is just a big man-made machine. It's a man-made machine that disseminates fundamental information and human opinions, right? It it always takes in information to denote fair prices for instruments so that fair trade can be facilitated in, right? Even in times of the Industrial Revolution, right? The world was starting to pick up speed faster than it ever was at the time. Technology was evolving at an exponential rate. Information and goods were being transferred at a much faster rate. Markets there still weren't disseminating information as quick as they are today, right? Allowing many people who had any sort of insider information or any foresight on the market trends, they were able to capitalize on it and amass fortune for themselves by taking advantage of pricing errors or these one-sided opportunities, right? All the market is, like I said, is just a large man-made machine that is simply a consolidation of human opinions, emotions, and discourse, right? The market moves when a large number of individuals influence it enough through their collective decision of where value is, right? What do I mean by that? The markets have decided, ultimately, the markets decide where value is. A good example of this is Netflix and Blockbuster, right? If we compare the share prices of Netflix and Blockbuster, you can see a point where Netflix share price overtook Blockbuster. You can see that clearly people, through their decision of buying Netflix subscriptions over Blockbuster rentals, that collective decision making is what drove Netflix's stock price to overtake Blockbusters and why Netflix basically stomped on Blockbuster as a business. The market simply accepted Netflix more than it did Blockbuster. And that's how value shifts, right? The market knows that uh, Netflix is the more valuable instrument and disseminated this information that humans collectively have undertook based on their decision making and spending by moving their prices accordingly, right? Markets just do this automatically through decision making that every individual does. So that brings us to this theory called the efficient market hypothesis, alternatively known as the efficient market theory. It's just an idea that states that all instrument prices or security prices or stock prices reflect all the information and that consistent alpha generation is impossible. All alpha is just extra returns, right? Because every stock is expected to give you a certain return, and if it just shoots to the moon, all that extra return is considered alpha. So to generate alpha consistently is impossible by definition through this theory. A perfectly efficient market means that investors and traders won't get much extra return out of an instrument, and the market is always perfectly priced. And to be honest with you, that's not true because then there's no point of any of us being here today. We all know that that's not true, right? The market is too sporadic and too parabolic to be priced perfectly because it also takes human emotions into account, right? Basically, if the market was perfectly efficient, there is no reason for any of this. There's no reason for me to present this to you. We all know that's not true because market is made by humans and it can never be perfectly efficient. So here's just a little infograph to show the efficient market hypothesis. All it says is that um, stocks and other tradable instruments always trade at their fair value in exchanges, making it impossible for investors to purchase undervalued stocks or sell stocks for inflated prices. Therefore, it should be impossible to outperform the overall market through expert stock selection or market timing. And the only way an investor can obtain higher returns is by purchasing riskier investments. We all know that's not true because guys like Warren Buffett, Paul Tudor Jones, John Templeton, Peter Lynch, all these big whales and investors and colossal giants, these guys have consistently beaten the market returns in the long run. So we know that this theory is not completely true, right? There's always these guys have beaten the markets consistently. So there is definitely a way to beat the market consistently, right? There's three forms of this theory. There's a weak, semi-strong, and a very strong form. The weak form assumes that the stock price includes all information publicly available, but not the information that is not publicly available, like insider information, right? The strong form assumes that both private and public information is priced into the stock. Private info is available to insiders. And the semi-strong is this form gives no importance to both technical and fundamental analysis. You guys can look into this on your own too, but the reason I brought this up is to basically showcase that yes, this theory is true to a degree, but it's not perfect because the market can be very unpredictable and it's moved by human emotion, not just by what's fundamentally true. So that brings us to technical analysis, right? What is technical analysis? All it is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activity, such as price movement and volume. Basically, through technical analysis, we take all the historical price action that all the data that we have available and we just look for patterns. We just look for patterns in the data and we make up theories based on those patterns, right? This isn't the same as fundamental analysis, which attempts to evaluate value based on business results such as sales and earnings, or GDP or anything like that, or any of those fundamental factors. Technical analysis focus on the study of price and volume, supply and demand, right? These are just extra tools to help scrutinize ways supply and demand will change based on price, volume, and implied volatility. You can use you can use technical analysis on any security with historical trading data. You can use this on stocks, forex, commodities, metals, cryptocurrencies. You can even arguably use it for real estate too, right? The main evidence for using technical analysis is that theoretically, all current market information is reflected in the price, and we can exercise that one-sided volatility and line up the best possible opportunities through this use of technical analysis, right? Like for example, like technical analysts look for similar patterns that are formed in the past and will form trade ideas believing that could possibly behave the same way that it did before. Technical analysis is also extremely subjective. While these ideas are shown to work, the market doesn't always respect it like some rule of stone. For instance, like let's say this was some trading instrument, right? We can see price try to break through this price level here. Let's just for simplicity's sake, it's 95 cents, right? Came back close to it, couldn't break through it. Came all the way down, grabbed better buyers, got in at better prices, and this order flow pushed it back up. Still couldn't break it, so they had to go lower, right? Grabbing more extra prices down here to see if it could break up even higher than this price. These charts allow us to see where the market has gone and gives us a better idea of where it will go next, right? And that brings us to support and resistance. So the reason I brought the idea of supply and demand before, it goes hand in hand with this idea of support and resistance. You can look at support and resistance as supply and demand zones to a point, right? Because if we look at the theory of buyers and sellers, right? In areas of support like this, buyers are looking to grab better premium prices to drive it up higher. And in resistance zones, sellers as being identify the security as being overpriced and try to push it down, right? So support and resistance is basically the bread and butter of technical analysis. It is the most widely used concept among traders, regardless of what instrument you choose to trade. If you talk to any trader, they are very familiar with this idea, and it's imperative that you add this idea to your toolkit because it will only serve to help you, right? Remember that it's widely subjective And so, technical analysis being so subjective, that this idea is no exception to that rule as well, right? Everyone will see support and resistance differently. So this diagram here on the left, where'd I go, represents a bull market. Buyers buy up the market to a high, and when it is time to take profit, you will see price reach what's called a resistance, right? Where price will start to pull back down, and buyers will end up taking profit, right? The reason why markets move like this is for various reasons. So when you see price reach resistance, let's say a high, the instrument has been overbought, meaning buyers have pushed the price of the instrument or the stock or whatever to highs where they have started to exit the market and taking their profits. Because at some point you got to take profits, right? The only way you can realize profits from any instrument you are holding is by selling it or selling the whole thing or a portion of it, right? Now, as these guys are selling their positions and taking profits, there are sellers who perceive the instrument as being overvalued, are going to try and sell it back down hand in hand with them and take their orders, right? And these guys are going to work hand in hand in order to relieve buyers out of their positions. And these surplus of sellers waiting to push the price down are going to push it down to a point where they exit and buyers eventually get back in, right? Vice versa is true when we're in a downtrend, right? This repeated process is what creates the waves in which we see the market move every day. Every healthy market moves in waves like this, right? Constantly hitting resistance, buyers exiting out of their positions, sellers pushing price down to short sell it, buyers getting back in when they reach the premium price, also known as buying the dip. When they buy the dip, they buy it back up to new highs. Sellers, oh, we're too overpriced now. We sell it back down. We just continue this process over and over again. So the market can't move in one direction forever. Like it doesn't move in a straight line up. It always moves in waves and it has to come down eventually. When they say buy the dip, don't buy at resistance because through a sheer amount of data, we always know that price always reverses back for a bit to create support where buyers will jump back in again. So buying the dip is just a fundamental way of maximizing your opportunity to be in profit. Because if you buy at resistance, you're not going to be in profit till the market corrects down, makes support, and goes back up again. This stuff might be confusing right now, but don't worry, it'll be clear when I dive a little bit deeper in. Does anyone have any questions so far? Let's check the questions tab. No one has questions yet? Okay. But yeah, when I do a technical analysis webinar, we will definitely dive deeper and why this makes sense and why these theories hold and they are true. Okay, so the last topic I'm going to dive into is psychology, right? So if you look at this middle diagram here, this trading system that you will ultimately create for yourselves is only 20% of your trading success. The other 80% comes from your psychology, your discipline, your emotions, your money management, your risk management, and whether you have clearly defined objectives or goals. Basically, it has nothing to do with how special you are, and you don't need to be special to be profitable in trading or investing. Most of your trading success is about all the things that hinder you as a human being. It's more about the things that you can change and improve upon yourself rather than the actual trading and investing discipline itself. You can be an amazing money manager, an amazing speculator, right? You can call the best sports bets, you can call the best trades, you can be the best at managing your money, but you can be a terrible trader simply because you cannot manage your risk. and forget about going anywhere with no goals, long-term plans, objectives. Your time in the markets will bring out the most emotion and irrationality out of you, right? We as human beings don't like doing things that aren't exciting, difficult, or make us feel inadequate. No matter how gifted or special we believe we are, it is very unlikely you are doing anything unique when you're in the markets. Everyone has done everything you think is revolutionary, right? People have been speculating the markets one way or the other for decades, if not for hundreds of years. It takes a special breakthrough or a lot of executional excellence to thrive long term, much of which is achievable by us all. Don't let the marketing you see on social media fool you. It isn't meant to be that easy, right? I think all of us are aware of how much financial gain trading and investing can get us. You can get you can get a very respectable income from trading and investing if you do it right. You can earn more money than a doctor. You can earn more money than like athletes, right? But you have to understand that doctors studied for decades to be in the position of prestige, authority, and excellence they work to be in. Athletes train their whole lives to perform in the NBA, the NFL, or any of these um, professional sports leagues, right? You have to have the same expectation and drive for trading and investing, right? You can't just give up if you're not good at it right away, right? If you expect to have the sheer amount of rewards trading and investing you think should give you, then you should have the same expectation for how much work you have to put in to get to that level, right? Just as doctors and other prestigious societal roles have roadblocks, trading and investing too will also challenge you in your own way. You are learning for life, not to learn to get rich quick and forget about it, right? Whether or not you choose to have a high earning profession, eventually you will have to do one of the following to amass wealth and put yourself in the position for financial freedom, right? You're going to have to own financial instruments like stocks, cryptocurrencies, real estate, um, gold, anything that appreciates in value or provides a cash flow like a business, whether it's intangible or tangible, right? You will own these things at some point in your lives because you have to make your money work for you at some point, right? Investing is something all of us will likely have to do in order to reach financial and time freedom, right? It is I believe it's fundamentally necessary for all of us to reach our financial goals and by extension our life goals too, right? A toddler doesn't fall after walking a few times and decides it's not for them, right? Take these tools and allow them to make the best financial decisions for yourself, right? Leave your ego at the door because you're not going to be perfect at it right away. It's going to take some time to get good at it. I've been studying this shit for 5, 6 years and I'm nowhere near where I think I should be. And I'm still a student of the game, right? You will find that trading and investing is a self discovery filled journey. You're going to learn tons about yourself, right? You're going to learn how emotional you truly are, how much you really care about money, and how stingy you are, right? It really brings out some demons in you too. But yeah, all in all, that's just the basics of what I wanted to share. We'll go into more. Vinny, do you want to add anything for psychology?
Yeah, I can go over some stuff.
Go ahead.
So I'll go a little deeper into like what Sanket talks about. So when you start trading, you'll learn a lot about yourself. Like once you actually start trading on the chart and you actually put in time to like when you first take a trade, because it's not like taking a trade with like demo or whatever. Once real money is involved, you really do learn about yourself because like, are you okay with losing money? And then when you start to earn money, like how are you going to react to when you earn a lot of money? Are you going to be all happy? Do you get like an ego boost? Because your ego can destroy you. Because what can happen is like you can have like 2 weeks of trades that you're just winning completely. Like you're like, yo, I got this. I got this. I'm the fucking man. You know, I turned $500 into $1,000. I doubled my money. Now I'm gonna turn this thousand into 2,000, et cetera, et cetera. But then one day you lose a trade, you lose two trades, you lose three trades, and then you keep trying to win that back. That's why you have to come up with a plan and like a trading plan, a trading strategy that helps you fight that. So like let's say your plan is like, all right, today I'm going to take two trades. But then even if whether you win or lose the trades, you're done. That's it, regardless of whether you lost or not. And then you also have to like be okay with losing money. Like or how what is your you really have to like go deep down inside and see like how you really feel about money. Because there's a lot of people that like when Sanket talked about like people who are good at managing their money. Like I've met a lot of guys, even like guys I trade with, some of my own friends, people in my trading group, who are amazing at money management. Like they're amazing. Like they'll tell you where all their money goes, every single dollar. They know where exactly where every single dollar goes. But as soon as they get on the chart, it's different, man. Like these guys, they like one of my buddies at work. He used to think that he was like the best. Like he was amazing at money. Like he has a condo and shit like that. Like very good at managing his money. So he had this ego where like, don't worry, I got this. When I go to trading, he put 1,000 USD into an account, and then like a couple weeks later, he comes back. I'm like, how you doing? He's like, I have $100 left, and it humbled him. And he's just like, yeah, he's like, this is a different beast. You really do have to like. And the thing is, like, if you're so a lot of us we're not like rich or anything like that. Like we're doing all right, but none of us are like super rich or like has like a lot of money. So those things also reflect on how you're on the chart too. So say you get into like I don't know some sort of financial trouble, you lose your job or whatever. Trading is not going to help you fix those problems. You need money to fix your car. Trading is not going to help you fix your car. You have bills to pay. You owe someone money. Trading is not going to fix those problems for you. And you have to get that out. Like trading should be added on to your own whatever, like an extra thing to like earn money, you know? Let me see, let me go through my notes. Yeah, so like do you have debts? Like what is your opinion of money as well, right? Do you see money as a tool or do you see it as a problem, right? Like if you look at money in a negative way, then you're not going to make money, you know? You have to look at it as like a tool. It's kind of like a car, right? A car is can get you from point A to point B. It can take you places. A car can take you to work, a car can do whatever, right? But then you can also use the car to like run someone over, right? So like it's like that, or like a gun can protect you, or you can go and shoot up a place. Like the same thing with money. And like your ego, you really have to check your ego because regardless of how special you think you are or smart you think you are, you can't out ego the market. The market will fuck with you because there's times where like when Sunkit does his technical analysis thing, like there'll be points where like you'll see like when the market is manipulated. So like those big whales he talked about, like Warren Buffett and those guys have so much money that they actually move the market. Like they're able to completely move the market because like whenever you're in a trade or whatever, they can see all that. They can see that you're in the trade and shit like that. So they know like especially like when you see people tweeting stuff like, "Oh, buy this, buy that." It's just to fuck you, you know? Like that stuff is just to play with your emotions. Let me see here. Yeah, in the market it doesn't care about your feelings, right? It's just it's just a different thing. You have to go into it emotionless. Like you kind of have to like the reason you come up with a trading plan and your goals is because the way the tools are created to trade, it's so it's like there's no rules. Like you can just go. I can go right now, open an account, put all my money into an account, and then blow it in one trade if I wanted to. Like there's no rules. You have to create these rules for yourself, and they purposely made these tools. Like when you use MT4 and MT5 and like Trading View and all these tools, like on your phone and stuff like that. The apps they all look cool. Like if someone wants to pull it up, he can show you Trading View. Like see, like it looks cool. And then like because we're using Trading View and you can't really trade off Trading View because we're Canadian, there's buttons. Like you can put these two buttons in the corner that just says buy and sell, and you can just buy and sell whenever you want. The market's always there. You can trade sit on the market 24/7. So that's why you have to put these rules because you have to know when you want to like get in and out of the market. And you have to really like sit down and think about like how you're going to do that. Make sure like you don't have things going on in your personal life. Like if you get into a fight with your girl or whatever and then you hop on the chart, it may fuck up your thought process and you might fuck a trade up. You know, you really have to be almost like a Zen monk when you're trading. Don't go into it in a bad mood. You know, like say you had a rough night or whatever, you got into a fight or some shit, or like you lost some money or whatever. Don't go in like you got to leave that stuff outside of the charts. because the market, it humbles everybody, like every single person I've ever met who thought they were better than the market, it has burned them. I'm sure Sunkit has same thing, it's humbled us both. You always have to leave your ego at the door when you're on the market, and you really have to be focused, like take your time, make sure you have like notes, choose a specific time you want to trade. The more and more you spend on a chart, you'll find like specific things that you see, and always trade what you see. Don't trade based on like what I see or what Sunkit sees. Like me and Sunkit, we have similar um things that we use, like similar tools, but our trading style is completely different. But the end goal is the same, right?
Yeah, to add on what
So
Vinny's saying too, like it's like what he said, the market's always here. And there was this idea that I wanted to show, right, that markets are fractal in nature. In case you're wondering, I forgot to get into this, but these units of charting are called Japanese candlesticks. All they really show is the open price, the close price, how high the price of this instrument went and how low it went. It just really helps gauge value, right? This is for gold specifically. Each of these candles right now I'm in the monthly time frame, meaning each one of these candle units represents a whole month of price data pertaining to this instrument. A whole month of price data, fundamental and technical, right? And we use these as clues to determine where price is going to go next. And markets are fractal in nature, meaning these these patterns that you see in these higher time frames, like downtrends, sideways trends, right? Like this is a downtrend, and then we have a sideways trend here, right? And then an uptrend here. These in the monthly, these are years worth of price data, right? We can see that in weeks. Now every candlestick represents a week, right? Same thing, downtrend, uptrend. We can even see some small sideways trends here, right? We can see that day to day, intraday, right? Where each of these candles is 4 hours in a day or 1 hour in a day, right? You can break these down to minuscule times, even down to the 1 minute, where every single candle is a minute of price data, right? You can still see the same patterns here too, right? Uptrend, sideways trend within this uptrend, right? It's fractal. Like you can
yeah,
go
and all you're
deeper
trying
and
to do is
deeper and zoom in.
you're just trying to catch one move, either one move a day or like whatever your trading plan is. And then like the other thing with like trading is like don't let your losses reflect your whole trading career. So like there's a book called Trading in the Zone. I have the audiobook and I have the PDF if you guys ever want it. The only reason I say it's a good book is because you can use it towards life too. So Trading in the Zone, like it helps you when bad stuff happens to you. A lot of us, we equate, like we get like trauma, right? Say you were a kid and a dog bit you, right? When you're a little kid and a dog bites you, that could scare you for the rest of your life of being scared of dogs. But then when you go out to the park one day and you see all your friends playing with a dog and you're like, yo, how come they're not scared of the dog? Because that one situation where you were bit by the dog is not the same situation that like every interaction with a dog is not going to be the same. And that's like a trade. So if you lose one trade or five trades or 10 trades, whatever, you lose all these trades, it doesn't mean that every trade is the same. Just because you lost that one time, you have to get out of your head that like every trade is the same. Every trade is completely different. Like when we talk about like when he showed you those patterns and stuff like that, like yeah, they look the same, but they're still completely different. Like they're not exactly the same. And then it also helps you in life too. Like it's like if you go talk to a chick and you get rejected, are you gonna stop talking to all chicks? No, you're not. You're gonna keep shooting your shot, right? When you go to the gym, when you can't lift a certain amount, you're gonna keep going back until you can push to the next level. And then the same thing with trading. You're gonna build that mental toughness to be trading. And then you have to like stop that like comparison, like, oh, like 90% of traders fail. Why? Because they're so caught up in their own egos. They can't check themselves. They have no self-reflection in the market, and that's why. So like yeah, when you start your journey, people are gonna tell you like, oh, why do you trade? Like, oh, everyone fails because that's the mentality they have. They never done it, and they don't realize that like each individual situation is the same, right? Like you can eat different fried chicken. It's all fried chicken, but it's not the same fried chicken, you know? It's all different in its own way. So you got to look at trading like that too. Like each trade is completely unique. Each individual situation is completely unique. It may have similar qualities, but it's not the same, you know? And that helps you get past that like, oh, I'm a loser. I lost all these trades. And like even in like life in general, it helps you get past like L's in life. Like just because you caught one L doesn't mean every L is the same, right? Just learn to accept losses. It's just you have to learn to do that, especially with money. When money involved, are you okay with losing money? You know, like the way sometimes you got to look at it is like, all right, if you go to the casino, usually most people they get really emotional after they lose a little bit of money, like, oh fuck, I lost 20 bucks or whatever. You have to like say you went to the casino with $100, you have to know that okay, I'm gonna lose that $100 or I'm gonna win more money on top. But once that $100 is done, that's it. The mentality. Like, all right, I'm going to take this one trade. Either I gain 10% or I lose 2%. Like, let's say that's your risk. Either I gain 10% or I lose 10%. But say you do lose that 2%. Are you done? Is your trading day done? Because you're trying to follow your strict rules, your strict plan, you know, and you have to look like 6 months ahead, a year ahead, 5 years ahead, 10 years ahead. Like, what are your goals? You can't just be like, yo, I want to make $1,000 a week from trading. It's like, how? How are you gonna do that? You have to like scale your life into it. And the thing with trading and working, so like when we all work, all of us, our parents, everything. So we're like generations of like working. So working is you're trading your time for money. But with trading, you're not trading time for money. The longer you sit on the chart, you don't get paid for the longer you sit on the chart. Your trading is your skills, the knowledge and information you put in to get the trade. So you're not trading time for money. The less you trade is actually better. Like the most successful traders, they only take a couple of trades. Either some take like maybe one or two trades a day, if that, and some take like two, three trades a week because that's all they need. Because that one trade, you're looking for the most value you can get. You know, like the best option. Like see the chart that Sunket has right there. That little red box, that's his stop loss. So that's his risk. That's what he risks. So he knows that he'll get stopped in that amount, or he'll get that big green move, and then that's what you're trying to find. And if you can catch that type of move, even like 4 or 5 times a month, you'll make more money than the average person, depending on how much you have on your account or whatever. You know, like people like you have to you when you're trading, you're not trading time for money. You have to get that out of your head. This is based on skills, knowledge. Like me and Sunken have been doing this for a long time, and we still fight our own demons. You know, it's not a race; it's a marathon. That's why, like some guys, like it takes them like 5, 6, 7, 8, 10 years, whatever, to become a successful trader. Some guys it takes. Some of you guys may learn this in like a year. Like the actual trading and like technical analysis, you can all learn it in 3 to 6 months. But the rest, it comes down to you, you know. And then like if you're really emotional about money, then maybe don't trade, right? Like we'll be honest, it's not for you. Like, are you okay with losing money? Like you know, like a lot of us, like the way you sometimes like that helps you look at money as well is like when you go out, you go to the bar, you spend $100. You're okay to spend $100, but are you able to do that same with the on the chart, you know, like maybe one weekend you don't go out and you put that money towards trading, but then you have to be okay to lose that money too, right? Patience is your best friend. And then the thing is like we're all so like stuck in this like instant gratification world where like you have Instagram, you have all this shit just like you're always bombarded with like fast, 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 you know, food, like you can get food like fast food, porn, whatever, like all this shit, drugs, alcohol, it's all like instant gratification, right? So like the same thing with trade, like you win one trade, you're like, yeah, sick, you know, I fucking made $100 today, sick. And then you're on this like ego high, like fuck, you know, I had a good week, and then bam, next week you get fucked. But it's like what you learn from the losses, that's where you really learn about yourself. And the thing is like you also have to fight FOMO too. Like Sunkit, he actually lost his trade because he got stopped out, but the trade went his way after. Because you see that part that's outside of the red at the bottom, that's where it took him out. So his trade got stopped out, but he didn't get back in. Why? Because his plan doesn't tell him to take another trade right after he lost. If you can build that type of discipline over time, you'll compound your account. And then the thing is, like, banks, they give you like 1%, 2%, 3%, whatever, like stupid amount, stupid percentages over the year. But in trading, you can actually get like 10% a week. You know, if you can't trade with $100 account, you can't trade with a $10,000 account. You're just trying to gain, slowly build that account up, and then eventually one day you're gonna be like, holy shit, like my $1,000 account is at 5,000. Then you take some money out and then you do it again, and you keep doing that. You slowly, slowly build and build and build. This is like a lifetime. You're always going to keep learning. It's not like a skill that you're going to learn once and you're like, all right, this is my job for the rest of my life. You have to adapt every year. Something different happen. Like right now we're going through like a pandemic and stuff that affects the market.
Yeah, we're
All that
trading
stuff
COVID
you have to
markets.
keep. Sorry.
Yeah, we're trading COVID markets. You have to adapt.
Yeah. So you have to adapt. Then there's like the who knows, next year might be something else. There might be a war. U.S. might go to war with Iran. Who knows? And then you try to trade off that. Like it's always going to be there, but you just have to like adapt. So it's a consistent. You're always learning,
Yeah.
always, and just like use it as a tool. Like same thing with crypto. You're always, and the thing is like don't always look at the good things you're doing. We get caught up. It's easy to get caught up in the negative shit, and that really fucks with your head too. So always look at the good stuff that you're doing. Like, okay, what am I good at? And then you try to improve on what you're good at. So like you when you start trading, you're gonna see like make sure you journal your trades and keep track of everything you do so you know where you did bad and you know where you did good and why, what happened. If you're not doing that kind of stuff, then there's no point. You're just trading for no reason. And like I'm guilty of it too. We're all guilty of it. Like see, like he's gonna show us how, like one of his trades that he took and he saved and like he keeps track of.
Well, this is shit. It's taking so long to load. But yeah, like
Yeah.
those gold cells I called, right? I didn't take the trade because I wasn't in the right headspace to take it, so I stayed out. But if we zoom out, there you go.
And then once, like, when you start to look at the chart, you start to see these patterns more and more. And then you'll base your trade off that. No one is 100% accurate trader. None of the guys that we trade with, none of our mentors, none of them. No one is 100% correct. You'll never be 100% correct. You really do have to learn to accept losses, and especially with money, because we're very emotional to money. Like people are very, very emotional to money. You have to learn to really, you really do have to learn about a lot about yourself and how you feel about money. Like, are you able to like take a $20 bill and burn it and see how you feel? If you can do that, then you're ready for trading. That's pretty like that's what all my mentors used to tell me before. But they actually said $100. They would say take $100 and burn it because that's what's gonna happen when you lose. That money's gone and you'll lose it instantly sometimes. But you just
Yeah.
have to like keep pushing through, and like you're gonna have to unlearn a lot of stuff. There's a lot of bad habits we've all learned throughout our life, and like society teaches you bad habits. Society teaches you that like you can't earn this type of money, or it's not possible. It's not possible to make 5 figures a month or 6 figures a month. But then the thing is, like me and Sunkit and even Debo, we know traders. Like I know these guys. I've sat down, I've had dinner with the guys, some of the guys I trade with, and there's guys who make 100K a week and stuff like that. Like I'm not bullshitting you guys. These are like real people. Even like the group that Sunkit's a part of and Debo's a part of, this guy Jeevan, he's about like 26, 27 years old and he makes 5 figures. I saw him go from making a few $100s a day to making 5 figures a month. And now he's just chilling. So like you have to get out of your head that like, hey, no, that's bullshit. Like a lot of people when you tell someone that like, hey, I know a guy who's a millionaire. Oh, bullshit. Because they're so used to that like instant gratification, Instagram, social media bullshit. Like, why doesn't he post cars? Why doesn't he post his crib? But he doesn't want to because he's rich. He doesn't give a fuck what you think. Like he doesn't give a shit about us. He's fucking rich. He doesn't even need social media. He does whatever he wants. And then Sunkit can vouch for it too. Like I know these guys. I've sat down with them. I've had dinner with them, and like we go out and these guys pay for everything. So you have to get out of your head that like you can't do it. You can make It'll take years and time, but you can make a lot of money. But it'll take time. And it's not gonna happen overnight. But eventually, like you can get to a point where, like, because you guys are all young, you're all in your early 20s, mid 20s, whatever. You can change your life in the next 5, 6 years, just from this kind of stuff. But you really have to put in the work. It's a lot of work, and it's a lot of mental work.
It's not
It'll
always
get,
exciting either.
yeah, it gets depressing to a point because like for me, the trading is the reason why I started like my own self-help journey because like I wanted to be good at trading. I'm like, why? What are these guys doing that I'm not? Why are they successful in trading and I'm not? So I wanted to do that. And then I realized I had to improve my life. So that's why I started to improve my life in every aspect. I started working out, eating cleaner, blah, 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 making more money, reading, and, increasing, learning more about human psychology. Because a lot of my trading faults are because of human psychology, like FOMO, this, that, like your emotions. You have to learn to like deal with these things. And if you don't want to do that, like there's nothing wrong with that, right? Like you don't have to be a trader. But it is a journey. It's not a race, it's a marathon. It's going to take time. Hopefully some of you guys get it faster than others, but it'll take time, and you really do have to start changing what you believe in your head. Like society tells you that like, hey, go to school, graduate, work, you're going to climb the corporate ladder. By the time you're like 65, you're making like 100K, and then you have a retirement fund and this and that, but it's like you can accomplish more than that, but you really do have to believe it and you have to put the work in. Like when people say hard work pays off, it actually does. But when it comes to hard work, it's not just like doing hard work. Like you could be the hardest worker at McDonald's and you're not gonna make $1 million, right? You have to like really find different skills and like put the correct knowledge in how you're gonna attack the market and how you're gonna benefit from the market, what the market has to show you, like how can you learn, like what tools are you going to add, you know it's like you're in a giant ocean and you're a little fish and you're just trying to feed yourself a little bit, but you're trying not to get eaten by the big fish. Or like you're just trying to you have it's a giant ocean and you have a glass, you're trying to fill your glass of water without getting killed or eaten by these giant monsters that are in the ocean, but you're in the middle of the ocean. You're just trying to fill your little cup and be safe, and that's pretty much like what you're trying to do in trading. That's why a lot of people fail. A lot of people talk shit about trading, and that's why you have all these assholes on Instagram who just stunt and this and that. What those guys are trying to do is they're just trying to take your money, so you pay them, and then they bullshit you. They show you cars, they show you this, but they don't show you how to trade or what trading is. Like the guys we follow, the reason they don't you don't see them on Instagram too much is because like they don't post their life. They don't post that like, hey, I drive a Lambo and all that shit. Like that type of shit is stupid. Just focus on the trading, focus on getting as much skill as you can, knowledge. You don't have to put hours and hours. Like if you put like half an hour a day, no worries. Look at the market in the morning, wake up an hour earlier. Like fit it around your schedule. There's a lot of time. We all have time, especially if you work a 9 to 5, you can wake up earlier, trade in the morning, and sometimes, you can look at charts throughout work, but just don't do it all day. Just figure it out, take your time. If you start with the good habits in the beginning, it'll be a lot easier for you when you start your trading journey. Like, make sure you have a plan, don't just jump in. Like, see, my problem is like I used to just jump in, no trading plan, nothing, because I thought I was better than that, like I let my ego get to me. I let my ego get to me. So like, I thought I was better. I'm like, I don't need no trading plan. I don't need to fucking write down my trades. I don't need none of this shit. None of this shit. And then when I started doing that, I started to realize what my mistakes were. And then now I realize like, and then I also write down like you should write down like how you felt to like that day when you trade, so you kind of know like what triggers you and shit like that. Like every little thing like is so intertwined in your life that everything affects everything. You can have a bad trading day and then it might affect you, ruin your day for the rest of your day. You might be like arguing with your family or your girlfriend or whatever, your friends. You might just be an asshole for the rest of the day because you lost money. You just got to learn to separate it. It is what it is. You take it in the chin. If you're a boxer, you're not untouchable. And yeah, that's pretty much, yeah. I'm just gonna end off with saying, yeah, the more you analyze your own life, the better you will be on the chart. And even if like you don't become the best trader or whatever, at least you learn about yourself and become a better person, right? Maybe trading isn't for you. Maybe you'll use the skills you learn from this to go somewhere else, right? We're all different, but yeah, that's pretty much it, man.
Yeah,
Hopefully that
most
made
definitely.
sense. If you guys have questions or whatever, you guys can unmute yourselves and just ask. I don't know if someone wants to stop the
I
recording.
just wanted to say one more thing. just to add on, and then we'll go through questions and have a discussion. Um, yeah, like at the end of the day, this webinar isn't just for traders. Like if you want to, if you intend to be a long-term investor, right? You want to have financial freedom, right? Like you can still use these tools because at the end of the day, we're all traders one way or the other, right? All of us are traders. The only difference between all of us is time, right? Me and Vinny as day traders or swing traders or whatever, we're playing a smaller time frame. Most people play a larger time frame when they buy and hold, right? The main idea we were just trying to get over is the fact that, and this is straight out of a book, our world suffers from deception of conventional intelligence, a deception of unchallenged and outdated wisdom, a dream killing dogma tyrannized by stale traditions, narrow beliefs, and cultural conformity. A deception that represents the greatest con of the civilized world, a ruse that feigns freedom and comfort when in truth its sole purpose is economic slavery and human homogenization, a state of servitude where you are an instrument, not of inspiration, but of perspiration and of desperation. This deception has infiltrated your mind and has become your default operating system. This operating system has granted you an inauthentic life of someone else's design, a life you did not choose, a life meticulously pre-planned and preordained to follow a predictable blueprint of mediocrity. You aren't living by a free will, you're living by a script engineering your involuntary slavery, right? The problem is people are not being educated, but are educated enough to believe what they've been taught, but not enough to question what they've been taught, right? Now, why do 90% of traders fail? Because they've been taught conventional wisdom. If conventional wisdom leads to how 90% live, which is an ordinary life of mediocrity, then it just goes to show that conventional wisdom may not be the way to do things, right? So at the end of the day, your hours on the chart, you have no entitlement to any reward just because you spent 8 hours on a chart. It all comes down to your execution. You could spend 8 hours on a chart and not execute shit, and you don't deserve a reward for it.
Exactly. And then like the other thing I forgot to add is like why, like you're trying to find the why, like why the market did what it did. Why did gold go up? Why did gold go down? Why did this happen? Why did that happen? And then that can translate into your regular life too. If something happens to you, try to find out why. So like the what we me and Sanket do is like we try to always figure out why we fucked up. Like say if we did fuck up in a trade or we did something stupid or we over traded or over leveraged or whatever, we figure out you got to figure out why. And then sometimes you got to figure out like why did you react that way? Why the market did what it did. So like when you're always looking for why, it becomes a lot easier. And not just in trading, but in life too. You got to like find out why. Like why did this happen? Don't just be like, "Oh, I lost a trade. I'm an idiot." No, but you got to find out why. Why did I lose this trade? Why did the trade not work out my way? Okay, this is why. Maybe I was trading at the wrong time. Maybe there was some news I didn't see. And the same thing with like you just got to figure it out, right? Like why did why did I overtrade? Did something happen today, or maybe I wasn't in the right state of mind? Always keep asking yourself why. Keep trying to find the why. Don't just like take it as it is. You try to find the why, and that helps you a lot too.
Always ask yourself, how could I have been on the winning side of my decision rather than the losing side?
And then when you do go back and do that, then you start to see like, oh shit, maybe I was trading at the wrong time. Oh fuck, my analysis was wrong, and it's okay, like it's okay if your analysis is wrong. Sometimes it happens, right?
So yeah,
It's all trial and error at the end of the day.
yep, and it's not like, kumbaya or, all of us are gonna make it, right? Like maybe some of us will, some of us won't, right? It all comes down to our tenacity and how much we want it, right? Like in order to succeed, you really gotta want it. And if you really want it, even if it's not like, so much of your time, even a little bit of time, compound it into compounding your skill and knowledge as an investor, whether even if you don't want to be a trader, even as an investor or as a business owner someday, this will all go hand in hand, right? Even a little bit make you will give you huge returns in the long run. So don't ever stop learning, right? Use this. But that basically
Always,
concludes.
yeah, just keep learning. Never stop. Doesn't matter. No matter how old you get, it's always just keep learning. It just keeps adding to your arsenal, you know?
Yeah. So we just covered like I guess in our opinion the basic stuff. I just scratched the surface mostly, but we will dive deeper into all these contexts. Like uh for those of you who are looking to be like long-term investors of stocks, uh this will benefit you. If you want to be traders, that's great too. Like I will teach you how we look at these charts, how we dissect them, how we line them up, and eventually you will be able to call moves like this just like I did,
Yeah, and
right?
then like we'll go over like technical analysis. We'll show you both like mine and Sunkit's, so like you kind of see like two different perspectives, but also how they're similar too.
Yeah. If you guys have
Because
any
we're both,
questions, you can write them down or unmute yourselves.
yeah.
Anything at all. We can
If you're still
elaborate on
awake,
anything that we have lost you on.
if you're still awake,
Yeah, if you're still tuned in.
do you stop the recording? You should probably stop it.
Yeah, I'm gonna stop it now.